Hello everyone and welcome back to Investment Research. I'm Simo, your equity research analyst, bringing you a crucial update on SoFi Technologies, ticker SOFI, as we move through a very active pre-earnings week. Yesterday, October 22nd, we saw a sharp decline, but today, October 23rd, the narrative has clearly shifted and the market is showing renewed confidence just days before the highly anticipated third quarter earnings report. Let's start with the numbers for today, October 23rd, 2025. SoFi closed at $28.27, marking an increase of $1.08 or a gain of 3.97% for the day. Trading volume was strong at 27,180,131 shares. The stock opened at $27.33 after yesterday's close at $27.19. Throughout the day, it reached an intraday high of $28.32 and a low of $27.20. This rebound is particularly interesting because just 24 hours earlier, SoFi dropped more than 7%, sparking a lot of discussion about whether investor enthusiasm was cooling off ahead of earnings. But today's move paints a different picture. The strong volume and the firm upward price action indicate that this is more than a technical bounce. It's a sign of renewed buying interest and underlying market confidence in SoFi's growth story. So what does this quick reversal tell us about investor sentiment? First, it suggests that the sell-off from yesterday may have been more about short-term profit-taking than a loss of faith in the company's fundamentals. After such a big rally earlier in the year, it's natural for some investors to take profits before a major earnings report. The fact that the stock recovered so quickly implies that other market participants viewed that pullback as an opportunity to buy shares at a relative discount. Second, it highlights that the bullish camp remains active and confident. Despite valuation concerns, many investors still see SoFi as one of the most promising players in the fintech space, thanks to its all-in-one super app model and its national banking charter. SoFi has continued to show consistent revenue growth, improved operating efficiency, and ongoing GAAP profitability, achievements that set it apart from many of its peers. The willingness of buyers to step in on dips underscores the belief that SoFi's growth momentum is not slowing down anytime soon. Third, this rebound helps ease some of the tension leading up to the Q3 earnings report on October 28th. The market is showing signs of stabilization, suggesting that sentiment may be shifting from fear to cautious optimism. That matters because it reduces the risk of further pre-earnings weakness and shows that investors are still willing to bet on SoFi's execution. Now, let's take a closer look at the bigger picture. At $28.27, SoFi is still trading above most analysts' average price targets, which range between $20 and $22, but below its recent 52-week high of $30.30. That range reflects the ongoing debate between SoFi bulls and bears. The bulls point to the company's diversification, consistent member growth, and improving profitability as reasons for continued upside. The bears, on the other hand, focus on valuation, with the stock trading at over 40 times forward earnings and roughly 9 times sales, arguing that there is little margin for error. That's why the upcoming earnings release is so critical. The company is expected to report around $880 million in revenue with earnings per share of 8 cents. Beating or missing those estimates will likely determine the next big move in the stock. Investors will also be paying close attention to guidance for the final quarter of 2025 and any preliminary hints about 2026 expectations. Another major focus area will be SoFi's business segments. The lending division remains the largest revenue driver, but the financial services and technology platform segments are growing fast and are increasingly important for long-term valuation. Any updates about deposit growth, loan origination trends, or cross-product engagement within the SoFi ecosystem will be closely analyzed. It is also worth noting that this pre-earnings period often brings heightened volatility. For a stock like SoFi, which has gained over 70% year to date and more than 230% in the past 12 months, investors should expect price swings as both sides of the market position themselves ahead of the report. However, today's positive performance shows that the buying conviction remains stronger than the selling pressure, at least for now. In my view, this recovery is a healthy correction within an ongoing bullish trend. The market needed to cool off after the strong rally, and yesterday's dip allowed some froth to come out. The fact that the price rebounded immediately shows that investors still believe in the company's long-term value creation potential. This kind of action often signals accumulation rather than distribution, meaning institutional investors might be adding to their positions quietly before earnings. If SoFi delivers solid Q3 results, particularly with continued growth in deposits, strong net interest income, and expanding profit margins, we could see another leg higher, potentially retesting the $30 mark, or even moving beyond it if guidance impresses. However, if the company falls short on expectations or offers conservative outlook commentary, short-term traders might use that as an excuse to lock in profits. As we get closer to October 28th, keep an eye on the daily trading volume and intraday volatility. Those will provide clues about how confident the market is heading into earnings. Also, watch for institutional analyst commentary or rating changes. These often come out just before big announcements and can sway sentiment quickly. To wrap up, SoFi's nearly 4% rebound today sends a clear message. Despite temporary pullbacks, market confidence in the company's growth story remains intact. The bullish sentiment has not vanished, and the buy the dip mentality is still strong among investors who see SoFi as one of the leading next generation financial platforms. SoFi's upcoming Q3 earnings will be the ultimate test. Investors want confirmation that revenue growth is sustainable, margins are improving, and that the company is managing risk effectively while scaling. The next few trading days will likely be volatile, but they will also be very telling. I'm Simo from Investment Research. Stay tuned because I'll be breaking down the full Q3 results as soon as they are released. Make sure you subscribe, stay informed, and stay patient. Thank you for watching, and I'll see you in the next update.